episode on our channel Talk of Town. We are here in this weekly series called Market Wrap, and we are here to discuss the markets for the week concluded 18th of July 2025. As usual, I have the same suspects with me, Mr. Prabhanjan Rao, Elysian Advisory, a SEBI-registered investment advisor, and Mr. Ashwin Kumar, the director of DAA Capital. Hi, both. Good morning to both of you.
Good morning, gentlemen. Very
Morning.
warm, morning here.
Great. I mean, again, I would say typically a muted week for the Indian markets, if I can put it that way, and marginally, upward trend seen in the S&P 500 index for the last 1 week. Of course, a lot of news floating around on the rate cuts. It's quite going to be quite interesting. Maybe a fortnight or a month going ahead, both for the global and the Indian markets. So first comes first. So I think we'll get in into the fundamentals on the global markets first. Over to you, Prabhanjanji.
Thank you, Ellen. As you rightly mentioned, muted like in Indian markets, but there's a lot of things happening around in the global markets. So if you see the crude, it's inch last 2 weeks data. If you pull out, it's inch from about 67 to $70. I mean, as I always keep saying, when the crude touches $70, emerging markets like us has to bring the rise.
Right.
So another one is the dollar index. um, Dollar index has also inched high. I mean, it was 97 hovering around past several weeks, but now it has crossed 98, and it I think briefly it also touched 100 and then came back. The CBOE index is around the same, about 16, and India VIX is 11.39. Which is, I always say, which is good below 14, but that means it has no direction. That 10-year GSEC
Right.
is 4.45. It started inching, and last week it was about 4.25 or something, and 30-year yield is 4.9. It crossed 5 and then came back to 4 point. It settled around 4.9. Sign of it's increasing. This again because of the crude dollar index, that tariff tantrums, all those contributed. Bitcoin. What do we say on the Bitcoin, man?
Yes.
119,000, and I don't know when it's going to stop. So we have been watching that since I've been watching that from 7,000. So still I don't get the heart to buy it. So on the United States, what is happening there are, like, as you rightly mentioned, Ellen, US markets are hitting all-time highs, but more than half the gains are just from six stocks we discussed this last week as well. Uh, to name it, this Nvidia, Amazon, Microsoft, Broadcom, Meta, and the other one is Apple. They are carrying the weight of the entire S&P 500. The mega cap momentum is always a double-edged sword, I would say. And why does this matter logically? Is market always needs breadth. Breadth induced momentum is always better. Participation from a wide range stocks is good for a rally to be very sustainable. When leadership narrows, it's always a warning sign. It tells you the sentiment is chasing momentum, but definitely not the fundamentals. And when the sentiment turns odd, the same leaders can correct very sharply. So that's what is. I feel it's what is happening. We need to be very cautious about what is happening there. And
Good.
tariffs now, it's not just a trade issue. Several weeks we have been looking into that. It is looking like a monetary policy shock because it has got a lot of twinings inside. And then earlier, it was not poking the inflation. Now it started poking the inflation. So it can very well be considered now as a tariff a shock.
True.
Because what happens is tariffs are always inflationary, by design. They raise the input costs, reduce the global supply chain efficiency, and trigger the retaliatory taxes, which everybody is doing these days.
Yeah.
The inflation pushes the bond yields higher, which has happened, which we have seen. Higher yields tighten the liquidity. Then we come and see Mr. Powell coming and playing his tantrums. This shadow is, to me, it's tightening now. And markets are still playing in a rate cut this year. This creates a dangerous divergence between the bond pricing logic and the equity optimism, if you ask me.
Right.
um, Another one I can say is, if the Fed pauses the interest rates, then it creates the mispricing in equities, because the
I see.
strong economic data reduces the urgency. We are seeing good job cuts, stable, though the inflation inched a bit, but relatively when compared to the growth in the US, uh, the economy is good. So strong economic data reduce the urgency for the rate cut. At the same time, it's sticky inflation. It limits the rate cut down. So it is a catch 22 situation. So I mean, I can always say, maybe technically it can get into a non-recessionary slowdown. Rates may stay elevated, liquidity might stay tight, but
Hmm.
GDP doesn't crash. Very dangerous situation. So everything goes onto, but GDP doesn't crash. So this, what happens with this is, with this scenario is, this kills the easy money.
True.
So, market leaderships is trying to move from high duration tech to value, cash flow, and yield stocks. And if you see the gold, since 3 4 weeks, it's just remained stable. So it may underperform if the real yields rise. So we
Okay.
need to really, whoever is investing in the U.S. markets, they have to really rethink on the allocation now. Now, on
Okay.
China, what is happening is, Chinese banks are rallying due to 5% dividend yields. Of course, we also discussed about um, the solar stocks in China jumped.
Yeah.
So, barring those two things, nothing is happening in China. And coming to Europe, these days we're seeing Europe also is dancing to the tunes of US now. Some leaders coming and then saying that, if NATO chief warning to levy 100% tariffs on China. See, these talkings, what happens is, they induce volatility in the global markets. And German, Europe's export heavy economies, like Germany, are the most vulnerable to new tariffs. Even good earnings can't fight trade restrictions.
Correct.
And any retaliation from risk from the EU, that adds another layer of uncertainty. So, as you rightly mentioned, Ellen, a lot of things that has happened in the global markets, yet Indian markets were very, very resilient. Yeah,
Soft.
but it's good for us. Very soft.
Before actually we get into the Indian markets, there's one important point we need to talk about, because there are a lot of articles coming out on the acceptance of Bitcoin and the way it is going to be treated going forward. Is it going to be a replacement for any of the currencies across the globe? A lot of articles on this front, and because the surge in the pricing, a lot of new entry into Bitcoin market. You're seeing first time buyers of Bitcoin or any other cryptocurrency. Your thoughts on this, Province?
See, on the Bitcoin, I mean, I always say it's a sort of a digital currency. In future, it's going to replace any form of digital currency. Um, and if you see the world markets, the Europe and the US are the first ones to to take it. And you see how Bitcoin has surged from nowhere to $117,000. The second is, the central banks or the government's push to promote the bitcoins. You see the US, you see in Europe, and also in UAE. You can have a chai with a bitcoin. There are so many chais in Karama where they offer. They can say, like, you can trade bitcoin. I mean, you can use the bitcoin for the tea. This sort of a support from the government is always important. And I would always say, in future, Bitcoin might it I don't say it will replace, but it will also emerge as a very strong digital currency. And why not? It should be. I mean, how long we should only depend on gold? How long we should only depend on in other physical metals? Anything which has a digital currency which is widely acceptable, where the supply is very limited. Why Bitcoin is moving is only because supply is limited, right? And we don't need a retaliatory tariffs like how we see. I'm not trying to blame any government over here in India, but also need to understand the markets. We also need to understand how the world is moving towards it, how world is accepting, and we also need to accept the emerging economies, especially like us. Also, we need to accept that give lot of what do you call it as a support to every investor who invests. Now what is happening is, any person who is in India wants to invest, the first thing which comes to his mind, you can't ask anyone, the first thing comes to his mind is, oh, the taxation on this is 50%. I take the risk, and why should I make the government as a sleeping partner? So in India, I would say, uh, it will take time for us to accept, but
Right.
in other countries, I think they have already accepted, they are moving on. So that would be the big future. I mean, there is no doubt about it.
Great. In fact, also for us, people, investors in India, there's a lot of reliance on the regulatory bodies, and because crypto is also not regulated, right, from the various regulatory bodies' point of view, there's a little bit of discomfort for the investors here. Okay, moving on. Ashwin, over to you for the technical outlook for the global markets.
I think Prabhanjan has covered almost all the aspects. So when something is rallying on the back of just 6 to 7 stocks, and that too from a very concentrated sector, it makes me think twice before calling it as a mighty bullish signal. So unless and of course you have other sectors participating, or unless and of course somebody else tries and fill the shoes of the current stocks that are rallying, the sustenance becomes a really challenge. I mean, you know how things are going to play out, and that's where I want to be calling a caution around these levels for S&P 500. It does not necessarily mean that it's going to start falling from Monday onwards. It's just that the trajectory is going to slow down, and there might be a little bit of a consolidation before impending correction will set into the US markets. Like I said, unless and of course you have other sectors pitching in eventually when these guys start correcting, because the nature of the markets and the nature of the stock is to correct. And when that happens, you want somebody else to fill in the shoes, at least that the index holds on. And that's the beauty of indices. You can have so many sectors which can become rotational in nature, and your indices is just up, and that's when your stock portfolio can also take a beating if you're holding those concentrated stocks in your portfolio. Having said that, moving on to the commodities, crude, gold, silver, everything is quite muted, marginally negative, marginally positive. So nothing much happened over the last. Although we saw intraday volatility, but eventually I am a firm believer of closing to closing on a weekly basis and closing to closing on a daily basis and a monthly basis. So when all the activity happens during the intraday, it's just noise. So on a weekly closing basis, it's quite muted, and I am seeing the same sort of activity for the next 1 week as well. So nothing much to call out there.
Okay, okay. I mean, one laymanish question to you, Ashwin. So, is there a chart for cryptos like Bitcoin? If yes, maybe one of the future episodes, we would love to see a chart of a Bitcoin, right? So our
I,
viewers would.
I was actually hoping or expecting this comment to come from one of our viewers, but I'm not surprised it has come from you. But for sure, definitely next week I'm going to have a Bitcoin chart, and it's see, for this technical, for us technical analysts, the beauty is that you need not be invested, but yet you can study a chart, and
Right.
without having your money put into the stock or the commodity or that instrument, and without actually having the emotion of having put the money, and then that's where your analysis becomes very very clear. And Bitcoin is one such example. I mean, the mighty rally that we saw in the past, then the sharp correction, then the rise is unbelievable. And then for all us eliticians and technical analysts, it's a wonderful chart to dissect. And see, a lot of people or a lot of analysts like me also wanted to call a top in it at some point in time, but the rally is continuing all the way beyond, and we are all, every alternate day when you are trading at the new lifetime highs, it becomes very hard to put a number to it as to where it will stop and when it will start correcting. So until it happens, by the time it start we know it's a top, it would already be 5 to 10% down. So that's the downside of being in technicals. But nevertheless, I'm very curious to track the Bitcoin chart, and I'll for sure have it on the screen for the viewers next week.
Great. Maybe to make it more interesting for the viewers this week, a small twist in the tale. So, as far as Indian markets is concerned, let's take the technicals first, followed by fundamentals. So, Ashwin, if you can continue with
Okay.
the technicals for Indian markets, we'll wrap it up later with the fundamentals.
Since when did you start, face reading, Ellen? I was something like this happens. I was, all geared up when I will be given a chance to present the technicals first. So, give me a second. I'll share the screen. Uh, just a confirmation. Screen visible, gentlemen.
Oh yeah.
Yeah.
So we had two things that we talked about last week. One is the channel that we had drawn, and the channel was broken. But also on the open interest front, we were talking about 24,950 to be a major support. And although we had a interim breach of this level during the week, especially on Friday, the markets have come back to close above 24,950. So I think this is where your major support is. But if it gets breached, I am expecting the markets to crack to these levels. These are your next major supports, and the way the channel is broken on the downside, and with the kind of volumes that we saw yesterday, without much chance for recovery during the day. If the selling continues, it's going to be a severe selling pressure for the next 1 week to 10 days. Having said that, if I quickly
Ashwin,
look,
if I may, intervene here, in the
yeah.
same chart, you did mark two levels, right? If you can tell our viewers the exact Nifty levels, that
Sure.
would be
So it would be somewhere around 24,650 and 24,000, all the way till about here, 24,200. And it's kind of reflecting in the open interest volumes as well. Can you see the spike in volumes? Right now we are at around 24,950, and the same kind of support is shown in the put option open interest. And this time around, what I've done is I've not only taken the open interest for the next 1 week, but I've also taken open interest for the next 2 weeks, which also happens to be a monthly closing. So but the major support comes in at around 24,000 to 24,800. If that is breached, your next levels are quite far away. And unless in the next two trading sessions we pull back above the channel that we saw here, uh, this channel that we saw here, then the market is going to be under severe selling pressure. While I
okay.
am still, I would still be a little neutral on Nifty. My next chart, the other big boy Bank Nifty, is the one that actually led the fall. If you see, we were talking about how it is an ending diagonal pattern. Ending diagonal patterns are, all of our viewers can, go online, Google it, what an ending diagonal pattern is in Elliott wave terms. It's a pattern wherein it's almost marking the end of a terminal impulse. It is almost marking the end of an impulse, or what we call as a terminal impulse, wherein the final up move is going to be a little dragged, derailed, congested, and then you have suddenly the breaking of the channels and market starts cracking down. And usually these reversals are very violent and very swift in nature. So
Okay.
if you see, Bank Nifty has breached the downside channel and continue to stay almost towards the low of the day. Now, my next, unless we have once again a pullback within the channel. My next important targets for Bank Nifty are 55,165 and 53,483. If not in the 1 week, at least the next 2 to 3 weeks. So these are the levels I'll be keenly monitoring on Nifty and Bank Nifty. While I believe or hope that Nifty has still, can stay neutral, Bank Nifty is the one that is going to be under severe selling pressure, and that's where I want our traders and viewers to be a little cautious on the banking stocks as well as Bank Nifty if they're looking at option trading.
Very interesting. Prabhanjanji, coming back to you, I'm sure the fundamental factors would also be giving us a similar direction. What data that you have to present as far as Indian markets are concerned.
Right. So, I would say it's a mixed thing. See, if technical factors, more or less are on the micro. It's a mix of micro and the macro and the global factors.
Yeah,
If you see the macro factors, fundamentally, India these days is realigning with the global scenario. It is
yeah,
no longer an emerging high beta play, which the foreign institutional investors used to use India as a high beta play. It's no longer. That's the reason you might see earnings in local currency, but in dollar terms, you might not see that earnings because it is no longer a high beta play. It's a low volume, demand driven structural story. If you
right.
pull out the data for the last 10 years or so. Why I'm saying this is, if you see currently the macro stability, we have a good macro stability scenario. The current account deficit is well maintained or contained under 1.5%. The forex reserves are at $640 billion. Dollars. Inflation is well below 5%. RBI neutral stance on the policy. So these are the macro factors which are like remaining very constant. Unlike in the global scenarios, you tell any continent, you take US, you take Europe, which countries have all this stability. I mean, it's only we have this stability in a world where most central banks are either tightening or confused. India's policy consistency is like a gold treasure. I would always say that. Now what it should trigger for us in the short term, what is triggering is the earnings. At the end of the day, whatever may be the global economic factors, the macro factors, what the sectorial earnings or the company earnings always matters. And to talk about the IT earnings, I would say they are disappointed. Jane Street's bank ban shook volumes, but underneath that, the FMCG, the pharma, and some quality financials are attracting the flows.
Correct.
And we shouldn't forget the IPO pipeline. It's heating up again. But why it matters logically is volatility, always exposes weak hands and rewards conviction. And when SEBI enforcement shocks the hit, retail investors panic, but institutions they reposition. So that's what is happening. Institutions reposition and retail investors they panic. This recent pullback is a healthy cleansing, I would always say, but it's never a collapse. It is just on a micro factors. We always need to have a cognizance on the macro factors, which I just read it out. So these micro factors, I would say, should be treated as an opportunity to enter. I mean, I always say, Ellen, that we need to treat stock investing as a business model for 5 years. And if we
Right.
see one sector is not looking good because of the earnings, for 1 year, 2 year or so, it's okay. Because one thing for us to make a note here is when the earnings disappoint, it forms a lower base. And when the earnings recover, and you see a sudden spike in the percentages, and that's where the stock gets a rebound. So when we look everything, when we invest good quality stocks, good management driven stocks, you invest in them, remain invested for 3 to 5 years, keep rebalancing it. So I think that is where it's a concentrated portfolio, stock with a good stock picking. That is where you will still make money in 3 to 5 years.
Okay.
Why would you say when the earnings disappoint, it will create a base? Could you
It will create
explain?
a lower base. It will
Okay.
create a lower base, and then when the earnings start increasing, so then
Mm-hmm.
when a small increase in absolute figures will have a sudden spike in the
Understood. Understood.
in percentage terms. And then we all keep talking that okay, the sales have been growing 25%, 30%. The ROA is then the parameters will start kicking in. Then
Got it.
people will
So that
start
becomes
investing.
your benchmark thereafter.
Exactly. That will be the benchmark. New norms thereafter.
Got it. Fair enough.
In fact, a couple of more, interesting facts which I came across. Of course, in addition to what you have mentioned, Prabhajanji, is I think there's a lot of steam getting into the housing finance sector. A
Right.
lot of volumes build up and interest shown by even a lot of institutions as well. And another very very positive and heartwarming article was now that DIA plus retailers are greater than the FIIs, right? It's
Right.
good to be a larger shareholder in your own market. So that's a very good
Yes.
takeaway for us, and it's a very very heartwarming news coming in. A lot of IPOs also expected. Big IPO, some of the big names expected later this year. So
Right.
interesting days ahead, and as always, disclaimer that any discussions in this particular forum does not constitute an investment advice. We are here to help you understand and educate in the right way. Prabhananji, you had something to say.
Yeah, I mean, very well articulated in the final. You have concluded. One point I would always add: there is also, we have seen some articles that the Indian consumer savings percentage has come down. That means they are not saving anymore in the traditional deposits. Also, they are putting money in the stock market. So I mean, when the savings comes down, there are two things: either they're saving in the stock market, or they are I mean, they are going at. I mean, they are contributing to the economy by way of demand. Purchases. That automatically kicks in. The lagging economy.
Okay, right. I think since you bought this point, I would want to end this episode with a quick question to both of you individually. If you were to change one thing from the Indian investor's point of view, what is that one thing you would, wish to that it would happen? I'll go with you, Ashwin, first.
I would, I know, I won't generalize here, but something that I did not do initially and later part of my, investing career picked up is when the markets, see, there are three reactions you can give when the markets crack. First we need to understand what a market collapse is to what a market correction is.
Yeah,
That education is very very important. Second thing is when it happens, the collapse or the market correction happens, either you can panic and withdraw, either you can, or you can say, look, I am a long term investor, I'm not going to do anything, I'm just going to keep my portfolio as is. Or if you're an aggressive investor, I look at it as an opportunity to buy more. So being from the category 1, I upgraded to category 2, and now I'm into category 3. So that's what I would like to see in the Indian markets, from all the retail investors. So when the market corrects, at least start with not withdrawing your investment, and if your cash flows and your finances permit, do look at topping up the schemes which are performing. See, because market correction is always a place and a time wherein you can review your portfolio and cleanse up your portfolio. Look at it
right.
as an activity and reshuffle and add, top up more if your cash flow and finances permit. That's what I would expect from the fellow retail investors.
Great. Over to you, Prabhananji. What would that one thing you wish that could happen?
Great, great. I would second what Mr. Ashwin told, but I would put it in a statement here that all the retail investors. This is a stock pickers market. If you don't understand the market, don't listen the noise. Just go to an expert, and then they will create a concentrated portfolio. Why I'm saying this concentrated portfolio
Very
is
important.
it's very important. And you see, there is a myth going around that if you invest in the index, that you are safe. Let me just give a small example. If you permit me, I will not take more than a minute.
Please, please.
See, if you see US, more than 60% is only because of the US index. It comes from the six stocks. Now, investing in that stock, do you think it is you're diversifying your risk? No, it's you are investing only in a more of concentrated portfolio there, and any one stock that two stocks doesn't sectorally they fall, the entire index falls. So that is more I would say that is more a concentrated risk than investor will be taking investing in index rather
Right.
than going to an expert. You will invest as per the risk profile.
Yeah.
and giving a exposure to very various sectors. You will get a chance to pick the sectorial leaders there, basing on the valuations. So the retail investor should always think, instead of do it yourself approach, they should consult an expert and then make their plan for 3 to 5 years as a business model.
Yeah.
That's what I would always advise the retail investors.
I agree because a 3 to 4 basis points over and above the index compounded over at 15-20 year period is a massive difference that it can make
Exactly.
to a portfolio. So
Absolutely.
excellent, excellent inputs, gentlemen. I'll take the liberty to answer the same question. So if I wish, I mean, if you look at the data today, the average tenor of an SIP is 24 months and an average tenor of an EMI is 15 years, right? I wish that these two gets interchanged and the average tenor of a EMI is 24 months and an average tenor of an SIP is 15 years. That's all I have to say, gentlemen. Thank you
Exactly.
very much for joining in, and see you soon in a week's time. Thank you.
You have a
See
good
you
week
soon.
ahead,
It was
guys. Bye.
fantastic as usual. Bye bye.